All right, what's going on, everybody? So in today's video, I'm going to be going over 10 different credit score mistakes. So if you learn from these mistakes, your credit score will improve. The thing about credit scores and credit in general, it's not the most complicated thing in the world. There are proven strategies that people have used over and over again to improve their credit score. So in this video, I'm going to go over 10 different mistakes that I see a lot of people making. And if you learn from these mistakes, your credit score will improve. I can guarantee you of that. So mistake number one is that I see a lot of people only using credit cards to build their credit score. So while you can build your credit score using only credit cards, it's just not the most strategic thing to do. And the people that have perfect credit scores or very, very high credit scores, they have a mixture of credit. So you want to have credit cards, you can have a car loan, you can have a property loan. You should have a wide mixture of things. And that's not to say just to go into debt with all these different things, but instead of paying cash, even if you can pay cash, it's also important to build your credit. So maybe you pay a little bit of interest and you pay it off each month. But getting a loan on your car is probably a smart thing to do. Getting a real estate loan is probably a smart thing to do. There's tax advantages to that. So you should utilize a mixture of credit. That's going to help your score. Okay, so mistake number two that I see a lot of people make, and this is probably the most common mistake that people make with their credit score, is that they will close out a credit account. So let's say they got a Macy's credit card, 10, 15 years ago when they didn't know any better, and they finally paid it off, and now they just want to completely close it out. That's actually going to hurt your credit score. And the reason being is that part of your credit score is your credit history, and the other part is credit utilization ratio, how much credit you're actually using versus how much you have. So let's say you have your little Macy's credit card and it has a $2,000 limit. If you close that out and you've been making payments on it, that's going to erase your credit history for that card. And it's also going to hurt your credit utilization ratio. You're going to have less credit to spend. So those are two negative factors that you don't want to do. So even if you bought or got a pretty bad credit card back in the day, don't close it out. Just use it for like a utility bill. Use it for some nominal amount every single month. And maybe you can even ask for an increase in that card to increase your credit utilization ratio. So overall, just never close out any type of credit account. Try to keep it open. Just put in a nominal amount on there. It's going to help your credit score overall. Okay, credit mistake number three is keeping too high of a balance on your credit cards and credit accounts. So ideally, you want to keep it under 30%. That's going to be how you build your credit, how you improve your score. If you're over 30%, if you're at like 50, 60, 80, 90%, if you're maxed out on your credit, that is going to negatively affect your score. And it's understandable if you're just forced in that situation and you have to do that. But as soon as you can, you should pay off those credit accounts, pay down your credit card. It's going to help you build your score and eventually lead to a bigger increase in your line of credit. Okay, mistake number four that I see a lot of people make is that they don't check their credit score regularly enough. So you should be checking your score at least once a month. With your credit card as well as any type of online banking that you might have, there's going to be options to check your credit score once a month. And there's going to be different bureaus reporting, so you should check if you have a different credit card account, different bank account, you should check all of them just to make sure that they're kind of on track with each other, because there's going to be slight variations typically. But you don't want to just check it every 6 months because a lot can happen in 6 months. I mean, even month to month, you can see some pretty drastic changes. If you pay off a loan or if you have a missed payment or if you rack up a lot of debt, your score is going to change pretty drastically. So you should monitor that as much as you can. Okay, mistake number five is missing a payment or having a late payment. So this can really ding your score if you have a history of like late payments and missed payments and things like that. So what you want to do as soon as possible is set up auto payment where it just drafts from your bank account. That's going to be the easiest way to solve that issue because you don't want to, like, let's say you're applying for a mortgage or rent or whatever it is, and they see a history of late payments, they see a history of missed payments. That's not going to look good. That's going to hurt your score. So try to set it up on auto pay. And what I typically like to do, I'll set something up on auto pay and then I'll typically call and confirm that it's on auto pay, because every now and then someone might mess something up. There might be an error on your side. So always set it up on auto pay, but then also confirm with the company or the lender that you're working with. Okay, mistake number six is co-signing for loans. So this is a very dangerous territory. If you're co-signing for a loan, just be careful. I mean, I see a lot of parents might co-sign for their kids just to get them started with credit. And I think in that situation, it might be okay. But if you're co-signing for like some new business startup that your friend is doing, or co-signing for something else, you really have to be careful. If you really want to protect your credit score, just don't co-sign for anything. Because once you co-sign, you're giving up your credit score essentially to some other person that may or may not fulfill their obligation obligations. So you're giving up control. So I would try to keep it as in-house as possible when it comes to your credit score. Okay, number 7 is not fixing mistakes in your credit score. So believe it or not, there are going to be errors in your credit score. There's going to be mistakes. Companies are going to bill you for things that they shouldn't have billed you for, or dock you for late payments that weren't actually late payments. So you need to regularly review your credit score and also review your bank statements and credit card statements and things like that, just to make sure there's no errors. And when you do see an error, you should submit the error online through the 3 credit bureaus, or you can mail in the error. There's a specific way to do that. If you look online at the 3 credit bureaus, information on how to mail in different errors, they can help you with that. But make sure you go after any errors. And the loophole here is that the burden of proof is on the credit reporting agencies to actually find out that you miss a payment or were late on a payment. And these are very bureaucratic organizations. That's very difficult for them to do. Even if you did miss a payment, or even if you were late on a payment, it's very hard for them to actually verify that in the time frame specified. So that's how these credit repair companies make so much money and can improve your credit so quickly a lot of times, is that they'll submit a list of errors, but maybe even a list of things that were actually happened. Maybe you were late on a payment, but because these credit companies are so bureaucratic and everything like that, they can't prove that you missed a payment. So your credit score can actually get significantly higher by disputing these different errors, or so-called errors in your credit report. So if you see anything fishy, definitely try to make a claim, dispute it, and try to get it fixed in your credit report. Okay, mistake number 8 that I see a lot of people make is opening up credit cards with department stores. And I touched on this briefly earlier, but just don't do that. It's not a good idea. They statistically and pretty much categorically have the worst rates, the worst benefits. It's just not a good idea. There's much better credit cards you can have. If you do a little bit of research online, you can find significantly better credit cards. And I'm not going to go into specific credit cards and everything like that right now, but 2 companies that I would highly recommend, and they have different credit cards with each company, but American Express is great. I would look at American Express credit cards. I would also look at Chase and American Express, and I've had lots of credit cards. I have a lot of experience with credit. I have over $100,000 in credit. Those have been my best experiences. So I recommend looking into those type of credit cards. Okay, mistake number 9 that most people aren't even aware of is not asking for increases in their credit lines. So if you've been with a credit card company or a credit account for a year, 2 years, even 6 months, you should ask for a credit line increase. There's typically not going to be some interrogation period. They're just going to say, okay, how much do you want? And then I would recommend asking for significantly more than you actually want. And then they give you somewhere in the middle. So if you have a credit card and has $1,000 on it, ask for a $5,000 credit limit. And then once they approve you for $5,000, then ask for a $20,000 limit, and keep going and keep expanding your credit lines. Most people, 5-10 years into their credit card and credit score experiences, they might only have $5,000 in credit. You should try to build your credit and build your credit lines as much as possible, because I think of it as like an insurance plan. You want to build your credit lines out when you don't really need them, because if you're an entrepreneur, if you're in business, eventually you will need them. It's going to help you get through the down months and things like that. So try to pay down as much debt as possible. You shouldn't just use your new increased credit line to buy a Maserati or get a Maserati lease or anything like that. But you should periodically, maybe every 6 months, ask for credit line increases with all your credit accounts. And I would add that if you have, let's say 3 credit accounts, you don't want to just do it all 3 at the same time, because that's going to, negatively affect your credit. If you're requesting credit line increases, they're going to do a hard check on your credit typically. So, a hard check on your credit is not the end of the world. It's going to ding you a few points, which in the grand scheme of things is not that big of a deal. But try to space out your credit line increases. Maybe do it every 3 months, every 6 months. Just don't do 3 or 4 credit line increases all at the same time. Okay, mistake number 10 is just avoiding credit altogether. So a lot of people think, oh, you know what, I'm just going to pay for everything in cash. I don't need credit. I don't want to rack up a bunch of debt. I don't want to keep up with the Joneses, that type of thing. However, credit can be used very strategically. And just because you get a $10,000 line of credit doesn't mean you need to use it. In fact, you should get a $10,000 line and then try to get a $100,000 line. It's going to help you. There's no downside to building up your credit. You can use credit pretty conservatively and pretty strategically. Just because you have a $10,000 line of credit doesn't mean you need to spend $10,000 a month. you can just pay a utility bill, pay a $50 bill on that credit account just to keep it active and keep it current and keep it going and keep your score increasing. The people that have the best scores oftentimes have really long lines of credit and oftentimes have a mixture of credit. The people with perfect credit scores are never like the people that just have like one credit card and just avoid credit at all costs. So you need to build your credit and use a mixture of lines, and definitely do not avoid credit. Okay, so thanks for watching this video on credit score mistakes. And if you have any questions about your credit score, drop them in the comment section below. And please like, please share, please subscribe, and I will see you in the next video. All right, bye.